बेसिक मनी मैनेजमेंट जानना और सीखना क्यों जरूरी है, जानेंगे इस वीडियो में। So, why should one learn about personal finance? Number 1, personal finance is for everyone. चाहे आप एक एम्प्लॉय हैं या एक बिजनेस ओनर हैं या फिर आप एक रिटायर्ड प्रोफेशनल हैं या फिर आप एक डिफरेंट फेज में हैं जहां आप अपने काम से एक ब्रेक ले रहे हैं, मनी इज़ फॉर एवरीवन। इफ़ यू डोंट नो हाउ टू मैनेज योर मनी, it is going to lead to financial ruin. Money is a tool which gets you everything you want, whether it's food, shelter, clothes, anything else that you can think of. It is said a poor financial decision can set your back life up to a period of 10 years. So, since everyone is dealing with money, so everyone should know some basic terms of personal finance. Number 2, money and time are very strongly correlated. The better you handle both your money and your time, the better your chances are of success in the future. आप पैसे को और टाइम को ठीक से हैंडल नहीं करेंगे तो टाइम और पैसा फ्यूचर में आपको ठीक से हैंडल नहीं करेगा। एंड नंबर 3, द अनस्पोकन मॉन्स्टर, इन्फ्लेशन। तो हर साल महंगाई बढ़ती है। इंडिया में इन जनरल अभी महंगाई 7 to 8% के करीब बढ़ रही है। विद इन्फ्लेशन, इफ़ यू डोंट इंक्रीज द मनी एंड इट्स सप्लाई टू यू, देन sooner or later you are going to end up very poor and very miserable. So now we are going to discuss some basic terms that everybody should know about personal finance, and these terms we are specifically discussing in terms of personal finance, not in terms of business finance. So the first term is income. Income is what is your take home pay after taxes, whether you are earning professional income or you are earning a salary or you are taking a dividend payment out of your business as a business owner. So what is your take home pay? Number 2 is expenses. Expenses are your daily living expenses. Expenses are rent, आपको रहना है. If you don't own your house, आपको rent देना है. Electricity, water. Then certain expenses are mandatory. If you have a car, then you need fuel. You need some clothes. You need basic grooming, haircuts, things like that. So all these things that you need on a day-to-day basis just to maintain your life, just to go on with your life, these are called living expenses. And number 3 is assets. What are assets? Assets are things which grow in value over time, financially speaking. So anything that you're investing your money in and it is growing with time, either at the rate of inflation or even better, if it's beating the inflation, then it's a very good asset. So different types of assets are real estate, stocks, and gold. For example, some people also consider crypto as an asset, and other less conservative assets are FDs, debt mutual funds, etc. etc. Number 4, liabilities. What are liabilities? Liabilities are things in which you invest money in and their value significantly drops over time. So if you buy a car, so car is a classical example of a depreciating liability. So car's value will keep on decreasing over time. After 5 years, if you sell the car, or after 10 years, if you sell your car, you're not going to get much return on the money that you invested. Similarly, if you buy unnecessary, if you overspend on materialistic things like clothes, handbags, shoes, which you don't actually require, these things go down in value over time. So you can consider most of these things as liabilities. So these were the 4 basic terms that everybody should know: income, expenses, assets, and liabilities. Now I am going to talk about some accessory terms that might help you in managing your personal finance. So accessory terms are: number 1, budget. What is a budget? Budget is basically a plan of how you are going to allocate your funds, whatever income you receive. Now how are you going to allocate it into different categories? That is called a budget. Number 2 is debt. Debt is usually when you borrow some money from someone or something from someone, and usually it has to be paid back at a higher rate of interest. Number 3 is net worth. What is net worth? Net worth is simply your assets minus your liabilities. So some people consider liabilities also as a part of their net worth, which is not actually true. Net worth is just your assets minus your liabilities. Number 5th is credit score. Credit score is a score which is kept by lending institutions like banks or NBFCs to track a person's credit worthiness. That means उन्होंने आपको एक लोन दिया है और आप कितने वर्दी हो उस लोन को वापस करने के लिए, कैन दे ट्रस्ट यू विद देयर मनी, इज डिफाइंड बाय द क्रेडिट स्कोर ऑफ द banks. And number 6 and last but not least, interest. Interest is just ब्याज. आपने किसी से 100% लिया है. If you have to return that 100 rupees with a 7% interest, so 7 rupees is interest on top of that 100 rupees. So some people understand personal finance really well, and they have used it to their advantage to get very rich and wealthy. Majority of the population struggles with it for most of their lives, and that's why they end up poor and miserable. So let's go into some different factors, some different perceptions of people who understand the game of personal finance versus people who do not. So let's discuss rich and poor mindset first, because your limiting beliefs are usually the cause that you are not able to put something in action. So rich people view money as a tool. Yes, they view money as a tool. They understand that money is just a tool which can either be used to buy assets which then buy back your time for you and you become free, or money is a tool with the same money can be used to buy liabilities which keep you poor and miserable, because you have to keep working to pay off those liabilities, and it becomes a never-ending cycle. So first thing is how the rich and poor view money. Second thing is character. So rich people usually they become wealthy over time because they are very disciplined about their budget and about their allocations. They are very disciplined about their spending. They know where they're spending money. And thirdly, they are characterized by delayed gratification. उन्हें जल्दी नहीं है, उन्हें कुछ चाहिए तो they are disciplined enough to wait for the right time to buy those liabilities, right? They are not in a hurry. They don't do impulsive buying or impulsive shopping. Whereas poor people are defined by ill discipline. They are defined by a lack of budget, by a lack of allocation of resources, by the need to buy impulsively. Mall में गए and they don't even plan to buy something. कुछ अच्छा लगा, credit card पे उठा लाए और उसकी EMIs भरनी शुरू कर दी. They cannot afford something, but they are buying on EMIs and paying excessive interest to the banks. Third is education. So the wealthy people, most of the studies that have been done on millionaires and billionaires, what they say is the wealthy people are continuously about education. They want to improve themselves, their skills, their systems, and everything about themselves. So their constant focus is on learning new things, reading books, listening to audiobooks. So they want to continuously upskill themselves so they can keep up with the times and they have a competitive advantage over the rest of the market. Whereas the poor are not focused on education part, they are more focused on entertainment part. So consider a person binge watching Netflix for 24 hours a day and spending most of their waking hours in entertainment. They are not going to get much out of it. Whereas another person actively taking courses, actively reading books, actively listening to podcasts to enhance their skill set, to enhance their knowledge and bring more value to the marketplace, and hence earning more than a poor person. Number 4 is debt. So rich people usually understand the game of debt and debt financing, and they use debt to buy assets. They use debt to buy real estate. They use debt to buy gold. They use debt wisely for their businesses. Whereas a poor person uses debt, but they use debt to buy things that don't go up in value, that is liabilities. They use debt to buy cars, they use debt to buy watches, they use debt to buy expensive handbags to show other people how rich they are. So another key differentiating factor is how the rich and poor are using debt as a vehicle to their advantage. The fifth is the rich are focused on net worth. They do not consider liabilities as their net worth, whereas the poor people are just focusing on the income portion of the statement. They are not thinking about building assets. They are just focusing on active income and not what they are doing with the income from there on. There may be liabilities. They may be spending all of it on their living expenses. So their focus is on earning more, but they are not looking at where they're spending their money. Number 6, risk. So every investment into an asset class comes with its own pros and cons. No asset class is perfect. So the rich, they study actively and they understand what is the difference between different asset classes and how different asset classes operate, and they are able to manage. Their risk tolerance is usually high because they are well educated, whereas the poor, they don't understand the risk because they are not well educated. They are not very aware of the game they are playing, so they become very risk averse and they don't invest, or even if they invest in very conservative assets like FDs where their money usually doesn't grow. Income streams. Whereas the rich are focused on building multiple streams of income, the poor mindset has usually a single stream of income. Rich understand that the business is unpredictable. The moat around a business doesn't usually last for a very long time, and businesses can lose their competitive advantage in the marketplace over a period of time. So they try not to build a single stream of income. Once a single stream of income is built, they try to diversify and build other streams of income, so even that a business loses its value or a business loses its competitive advantage, they are not affected much by the situation. Whereas the poor or the middle class just have a job to rely on. As soon as the job goes away, their income stream collapses completely. And another thing is about lifestyle. Studies have found that the rich people usually live way below their means. That is, whatever they spend is way lesser than whatever they earn, and whatever they save, most of them they are investing into assets to build over time and make them wealthy. Whereas the poor usually believe in lifestyle inflation. They want to look rich to other people, so as soon as their active income increases, they are spending more and more money on liabilities to look rich to other people, and in turn they are getting poorer over time. Number 9 is networks, right? So since the rich, they are educated, they are aware, and they are providing value in the marketplace to other people. So by default, they slowly but surely build strong networks with other people where there is an inter-exchange of value between two people in the society. Poor are not providing much value to the society, and hence they don't build those strong kind of networks over time. So we have spoken about the mindset. Now let's speak about how the cash flow cycle of a rich versus a poor person actually looks. So let's start off with a poor person. Poor person has low skills to offer to the marketplace, so their income, the take home pay is actually low, right? Now that low pay again is completely spent on expenses. Most of the people who live very poorly, their income is already low and most of it is getting spent on living expenses like rent, water, food and electricity. Their assets column is usually nil, as well as liabilities column, because they don't have sufficient funds to buy liabilities also. Now let's go one step above. Let's discuss middle class. So middle class, their income is higher than a poor person, and even above average middle class, their income is higher than the middle class also, but they want to look rich. So what happens is the income comes in, some portion of it goes to expenses, but other portion is used, or most of it is used to buy liabilities like cars, clothes and things like that to look rich to other people. So what happens is, since most of the money is spent on liabilities, which are not growing in value over time, these people need to work more and more and increase their income more and more as they age, and it becomes more and more difficult for them. Now let's talk about how a rich person's cash flow cycle looks. So rich person is highly educated, they know what to do with their income. So as soon as the income comes in, it is allocated. So some part of it goes to expenses. They know what their living expenses are, which they try to keep to a bare minimum. So some part they save as an emergency fund to keep for emergencies, and most of it goes into assets. So assets build up over time as the value of their real estate, their stock market portfolio, and the gold that they have invested in, as it goes up over time, these assets start throwing off passive income. And then this passive income is either used to build more assets, or this passive income is used for their desires, their luxuries or lifestyle. They know that the passive income that the asset is throwing off is going to be repeatedly thrown whether they work or not work. So their passive income is not dependent on their active income. How much they are bringing home has nothing to do with what their assets are throwing off. Here the concept of delayed gratification actually really comes into place, because these people know that if they throw their active income on liabilities, then they have to keep working for the rest of their life. Whereas they know if they build assets, those assets are going to work for them and generate enough returns so they don't have to work anymore. So what are different actionable steps someone who's in a poor mindset or a middle class mindset can take to get out of the rut? Number one is fix your mindset and remove your limiting beliefs. अगर आप अपने घर में बड़े हुए हो, कई घरों में बताया गया है कि मनी इज़ इविल, ज़्यादा पैसे होना बुरी बात है, इतने पैसे का क्या करना है, क्या ज़रूरत है. सो यू हैव टू गेट आउट ऑफ दैट माइंड सेट. मनी इज़ नॉट इविल और मनी इज़ नॉट गुड इनहेरेंटली. मनी इज़ जस्ट अ टूल, और उसको आप जैसे यूज़ करोगे वो आपको वैसी ही चीज़ रिटर्न में ला के देगी. आप मनी को वाइजली यूज़ करोगे, एसेट्स बिल्ड करोगे, यू विल बी वेल्दी ओवर टाइम, यू विल बी हैप्पी एंड फ्री. मनी को से लाइबिलिटीज खरीदोगे तो यू विल गेट पुअरर ओवर टाइम एंड मोर मिजरेबल. सो फर्स्ट थिंग इज कीप योर सेल्फ कॉन्टिन्यूसली मोटिवेटेड. राइट, हाउ डू यू मोटिवेट योर सेल्फ? दैट इज वेयर एजुकेशन कम्स इन. तो यू हैव टू फोकस ऑन एजुकेशन एंड नॉट एंटरटेनमेंट. अपना टाइम नेटफ्लिक्स पे, इंस्टाग्राम स्क्रोलिंग पे लगा रहे हो एंड ऑल दोस थिंग्स, रादर देन एजुकेट योर सेल्फ. आप अपनी स्किल्स बढ़ाइए, आप अपनी स्किल्स बढ़ा के अपनी एक्टिव इनकम बढ़ाइए. वेदर यू आर अ फ्रीलांसर और इन अ जॉब, इंक्रीज योर स्किल्स, एंड देन इफ you think you have enough skills, you have enough resources after a certain point of time that you can build a business, go for that and increase your income substantially. तो एक्टिव इनकम बढ़ाइए, बट एक्टिव इनकम तभी बढ़ेगी जब आप मार्केट प्लेस में वैल्यू ज़्यादा देंगे, और वैल्यू तभी दे पाएंगे जब आपकी स्किल्स ज़्यादा होंगी, और स्किल्स तभी ज़्यादा होंगी जब आप उन पे एक्टिवली अपने टाइम उन पे लगाएंगे rather than focusing on entertainment. You can also read books along with take courses. You can have audio books. You can speak to other people in a circle जो already वो कर रहे हैं जो आप करना चाहते हो. Number 3 is budgeting, right? So you need to have a plan. You need to have a budget, right? You need to know how much money I am getting in. उसमें से कितना बजट मेरे एक्सपेंसेस पे जाएगा, कितना बजट मैं अपनी ग्रोथ के लिए, अपने स्किल सेट को एनहांस करने के लिए खर्चूंगा, कितने पैसे मैं अपने इमरजेंसी फंड में सेव करूंगा, और कितने पैसे मैं आगे इन्वेस्ट करूंगा, और कितने पैसे मैं अपने फन कॉलम के लिए 10%, 20% कितने छोड़ने वाला हूँ. एंड दिस शुड बी डन एट द स्टार्ट ऑफ द मंथ. अगर आप महीने का एंड का वेट करेंगे तो सारे पैसे इधर उधर खर्च हो जाएंगे, राइट. नंबर 4, जब आप अपना बजट बना रहे हैं, अगर आपने डेट ले रखा है उन चीज़ों के लिए जो टाइम के साथ वैल्यू में ग्रो नहीं करती हैं, इफ़ यू हैव डेट फॉर क्लोथ्स, इफ़ यू हैव डेट फॉर हैंड बैग्स, इफ़ यू हैव डेट फॉर शूज़, if you have debt for an expensive watch which is likely to go down in value over time, so anything that if you have debt for a phone जो आप किसी काम के लिए यूज़ नहीं कर रहे हैं, बिजनेस के लिए यूज़ नहीं कर रहे हैं, then that is also a liability. So all these debts have to be paid, क्योंकि जैसे इन्वेस्टमेंट्स में आपके लिए आपका इंटरेस्ट कंपाउंड करता है और आपको सब्सटेंशियल रिटर्न्स देता है, वैसे ही डेट भी कंपाउंड करता है और आपको ओवर ए पीरियड ऑफ टाइम पुअर एंड मिजरेबल बनाता है। अगर एसेट्स के लिए डेट लिया यू कैन कीप दैट, बट इफ you have accumulated debt for a lot of liabilities, one by one you need to keep paying them off. Number 5 is, before you start investing, first build an emergency fund. कल कुछ खुदा ना खास्ता हो जाए, आपकी जॉब चली जाए या फिर कोविड जैसी सिचुएशन वापस आ जाए, कट्स लगने शुरू हो जाएं। सो द फर्स्ट स्टेप इज सिक्योरिटी एंड पीस ऑफ माइंड। आपको पता होना चाहिए कि यार मेरे पास इतना है कि कल मेरे बिजनेस को कुछ हो जाए, मेरी जॉब चली जाए, मेरे को 6 महीने 1 साल मैं कुछ ना भी करूं तो मेरे को और मेरे घर वालों को कोई दिक्कत नहीं होने वाली। तो अगर आप सिंगल हैं तो एटलीस्ट 6 मंथ्स के आपके पास लिविंग एक्सपेंसेस होने चाहिए, और अगर आपके पास बड़ी फैमिली है तो अप्रॉक्सीमेटली 1 ईयर के आपके पास लिविंग एक्सपेंसेस इन एमरजेंसी फंड होने चाहिए। इसके साथ कुछ इंश्योरेंसेज आज की डेट में मैंडेटरी हैं। ठीक है, हेल्थ का कुछ नहीं पता, हॉस्पिटल्स के बड़े बड़े बिल बनते हैं तो हेल्थ इंश्योरेंस, देन यू नीड टू हैव अ लाइफ इंश्योरेंस एज वेल, बिकॉज लाइफ इज अनप्रेडिक्टेबल। आपको कुछ एक्सीडेंट में हो जाए तो आपके बच्चों का कौन ध्यान रखेगा। सो लाइफ कवर विद एड ऑन राइडर्स इज ऑल्सो इम्पॉर्टेंट। एंड देन वी कम टू द लास्ट पार्ट, इन्वेस्टमेंट्स। आपके इमरजेंसी फंड इज ओके, नाउ यू नीड टू ऑल्सो डिसाइड कि आपको कहाँ पे पैसे इन्वेस्ट करने हैं। उसके लिए यू नीड टू बिकम अवेयर कि हर इन्वेस्टमेंट के प्रोज और कॉन्स क्या हैं, अपने आप को एजुकेट करिए। सो दिस वाज माय वीडियो ऑन पर्सनल फाइनेंस। आई होप this was not too much to digest and you liked the concepts that I talked about. Thank you for watching and see you in the next one.